Welcome to this video. It's 18th of July, it's Tuesday, it's 8 PM GMT. Now, what I want to do today is look at what I consider to be a great risk-reward trade setup, which has got really big downside potential. It's NZD JPY. Now, we did look at it last week. We're very bearish of the Kiwi. Has come down a little bit, but it's got far further to run in our view. We think the downtrend is really going to accelerate. Now, I'm going to just go and draw my levels on the chart. I also want to discuss a big fundamental reason why the Kiwi is going a long way to the downside. So let's go take a look at the chart. Chart of NZD JPY daily. Just going to go through the sentiment behind the charts, because the sentiment will give us clues to where the price action is going to go, and just as importantly, how far the price action might go. Now, in terms of at the top, I put the CFTC net traders positions. For those of you unfamiliar with this tool, it is one of the best in Forex trading for alerting you to big trend changes. I've done an explanatory video underneath this one if you want to learn more about it and you're a new viewer. But just in short here, what we like to do is watch for non-commercial speculators to go heavily one way, commercials to go heavily the other way in terms of their positions, and then we want to go with the smart money commercial hedgers. They've got a fantastic track record of spotting major trend changes. So from our perspective, we want to be with the commercials. And this is a really good divergence for us. Non-commercial speculators, 7-1 in favour of their positions in terms of longs over shorts, are very bullish. Commercial hedgers, 10.4-1 in terms of their positions in favour of shorts over longs, and they've accelerated their selling into this sideways consolidation here. Ratio divergence 17-1, which is the biggest on the CFTC net traders report this week. By the way, that should be 7.1-1. Sorry for the error. Right, so we know we've got big commercial hedgers coming in to sell, just as the speculators are really stepping up their buying. Now, in terms of a bearish fundamental, it's this one out today. Consumer price inflation was 0 for the second quarter, okay, in New Zealand, against 0.2 expected. Now, what does that mean? Well, if you've got no inflation as a central bank, you're not going to be raising rates. And a lot of the market thought that, the RBNZ would be raising rates. And this 0.2 forecast by economists, when a currency is rising, I find it strange they did this, because currency rising dampens inflationary pressure. But that aside, we don't think there'll be a rate hike by the RBNZ. In fact, we think there'll be a cut as commodity prices fall. Now, this is a favourite carry trade. New Zealand dollar, decent interest rates on it. Buy it against the low yielding yen. It's not looking so attractive now. There's already a lot of speculators in the market, so they might be thinking, well, hey, go for something as a different carry trade. This has been a really big favourite of, let's say, hedge funds, for example. Now, these two, the bearish fundamental CFTC net traders, are telling us this trend, which has been nicely up, has now run too far. Now we're getting this choppy sideways action. Now, in terms of alerting yourself to trend changes, the ADX is a great indicator. I put it on. Very simple indicator to use. I'm using the original Wells Wilder one, not the MT4. And I've stripped out any D lines, but get a lot of questions on this. So it's a Wilder single line. Okay, what you're looking for is when it goes above 40, the black line here. As soon as we turn down, you look for a move against the prevailing trend, be it up or down. You've got a nice downtrend here. You get the ADX turned down here, blue candle, then we go off to the upside and just basically keep going. Saying in the last video, the ADX above 40 again, watch for the turn down to get in. We were lucky with our entry on this in terms of when it got up to here, okay, came back, came on the red candle with the ADX through the body, sorry, not through the body, through the tail of this blue candle. So got in at 82.65. Now, what's happened is obviously we've travelled sideways. Okay, so let's just draw the obvious level of resistance, which is going to be, I think, 83. It's a round number as well. And, when you have a big strong trend ending, you very often get this, when we go sideways, sort of distribution as it's called in Dow theory. And here we're just basically looking for distribution to end and a downtrend to develop. Now, when you've got a strong trend, the 20-day moving average is normally where buyers are going to want to come in. So this dip here, they come in. This dip here, they've come in as well. It's got below it and then comes straight back up. Now, from our perspective, we are basically, sorry, if I can just pick up my mouse again. We are basically losing momentum in the last few days, in my view. If I could get that straight. See it just coming down over the last 3 days. This isn't really moving higher. I think this could be the last push of the bulls. I'm not ruling out another go at 83, but this trend is on borrowed time. Goes below the 20-day moving average and takes out 82. We are going south, in my view. Now, how far south are we going to go? Well, with the large amount of speculators in the market, it's not going to be a small move if this does break to the downside. So yeah, I would say coming through, get rid of the round number, the turbulence around it, say through 82.70, and then see if she runs. Now, what will happen is obviously, big speculative long position is going to get run on stop. So the first level is going to be there, in my view, which is 76, okay? But I'm actually much more bearish than that. I'm going for 76 longer term. Although obviously, you want to obviously get down to 79 first. Where would you put your stop? I wouldn't put my stop behind that tail. I'll put it back at about 83.80 until there's a clear breakdown, then bring the stop in. This just got plenty of downside potential. Now, from my perspective, Japanese yen, if you look at stock markets, they've been breaking the multi-year highs. That would normally weaken the yen, but not recently, just travelling sideways, okay? So that is a bullish fundamental for me, because I think stock markets, if they're going higher, they're not really, weakening the yen. If they break lower, and I think a good corrective break is on the cards, then the yen is going to appreciate and push the Kiwi down. Now, I think with this setup, particularly for position traders, I think it could be a really good one. I think 79. If we break lower, I think is easily on the cards, but I think we could easily run on to 76. It's only this low volatility risk on that's kept the Kiwi firm. It's losing its yield advantage. Could see some stock market downside, and also higher volatility. So very bearish of this pair, and that is my review of it. Thank you very much for watching.